Hello traders, good morning, good evening. How are you today? Please give me some okay that you can hear me. Wonderful, thank you very much. So how are you guys? I hope everything is good. And let's begin. Let's go over the reports and the updates that we have set yesterday. We have the weekly preparations. Okay, so let's cover them and discuss about our opportunities. Danilo, bearish about what? The feeling? Feel bearish? Look like something to sell? That's a good mood. Bearish mood is good. I feel like a bear most of the time. That's a good feeling to be like a bear. Sleep during the winter, right? Okay, so let's begin, guys. The first one is our New Zealand and Canadian, basically the pair that continues its move down. Quick reminder, according to the daily cycles, we are bearish, and we are bearish towards 50%. 38.2 is the first zone where we should start to pay attention to, and our final destination will be 50%. Now, according to that, the 4-hour chart is developing some kind of triple descending cycle, each leg getting smaller and smaller than the previous one. This zone becomes to be a critical area. It is cleaning almost the last low, and it's important to be clean because for all those that went buys here, this is the protection. So it's important to clear that for the sellers, for the real selling confirmations, right? Stop losses have to be taken first of all several times before any bullish appearance can take place. Now this is a big triple cycle on a daily developing, and on a small view, a 4-hour chart has a cycle by itself. So we are approaching to some critical zone. We don't have any reason to get into buys at this stage, but we definitely need to start and pay attention to this zone and then the 50%. In order to be able to start looking for short-term buys from that moment, corrections, or to cash out the sales that we are holding for a good while right now, what we have to start and see that false breaks or higher highs, the combination, false breaks and higher highs on a 4-hour or the 1-hour chart. As for now, we have nothing. It's one go, right? Therefore, it remains bearish. Once we get the false breaks and higher highs, that would be a sign that something is changing. As long as it did not happen, idea is still for sales. Okay, that's the first one. Very important to go over that as it's developing. Next one on the list is the Euro versus the CAD, a pair that we said that according to the 4-hour chart, we might get some corrective area at this point. As for now, it's still holding here, but once again, in order to be able to get involved into bullish corrections, we need one of the two things. False breaks, which we got. 1, 2, 3, right? We got some beautiful false breaks. We got a trendline breakout. We have the conditions for possible buys. Now, in order to be able to enjoy from short-term buys, we first of all have to define invalidation level. So we are as long as this low holds. And what we require is basically corrective cycle before the buys. Corrective cycle could be two waves. or corrective cycle could be bullish hidden divergence. Currently it's forming both. Currently it is forming both. But do we have any setup? Do we have any reason for entry? Do we have a trendline breakout? No. Do we have any confirmations on the lower time frame for lower time frame trendline breakout or anything like that? Not yet. And the correction itself, look how deep it is. It's going through all the Fibonacci's retracements. Right? So in that case, what we have to remember, we are in aggressive view because we are against the daily and the weekly, and in aggressive setup because we are currently even below the zone where we would like to trade from. So in that case, we have to apply the double confirmation principle. First of all, we are against the higher time frame. Second, it's also aggressive setup by itself. No reason to be any kind of hero here. So we are waiting for the better setup. The better setup would appear as a reversal. If we count that as a current trend line on the intraday trend line, a reversal, a confirmation, and another breakout. Right? Then and only then we can start looking for the trade. The reason we always have to remember in such cases where there are conditions against us, the reason to be more conservative and work with the double confirmation is because we want to avoid traps. That's all. Currently, there are many traps. Daily and weekly are still bullish. 1 hour went below the Fibonacci retracements. So only the fact that maybe this is bullish hidden divergence, it's not enough. That's why we must apply the double confirmation principle. Okay, same with the OZ versus the CAD, which we are short-term bullish as long as this invalidation holds. Now and only now it develops the two waves, which we can look to deal with after the breakout. And again, aggressive for one reason. This is still against, well, not against, sorry, without confirmations from the weekly and daily cycles, only relying on the divergence without a cycle. So we got kind of a triple here with double top. Now it's forming a double. As long as the invalidation holds, this breakout could become relevant. Small risk is a must in that case because of the reason explained. So that's for the CAD pairs. Dollar CAD by itself, we also are looking for the area of 125, 124 according to the cycles we have. So once we get it here, we can start talking about the retraces, and that would be most likely the time where all the CAD pairs will line up and provide a same. Okay, that's for the CAD pairs. The next one on the list is the one that we have been waiting for, OZ versus the Kiwi. Now here I would like to show how patience pays off almost every time. Why? Very simple. According to weekly and monthly cycles, I want to remind you, we are after buys. This is special cycle and bottom of the range, so we want buys. Same with the weekly, of course. According to the daily, we had a double cycle on the big view, and we had a double cycle on the small view. And on the 4-hour chart, we had this cycle by itself. So all the options with us together. On a daily cycle, we had a false break with a divergence, also alternative trendline false break. The divergence is there, everything is with us in that case. So in that case, we can drop lower to the lower time frame. On the lower time frame, we got ourselves the convergence after the trendline breakout, also false breaks, of course. And that means, can we work with the 1-hour chart, yes or no? who can help me out with this question? Can we drop to the 1 hour chart and work with the 1 hour chart? Yes or no? Yep. Yeah, we have to. Well, we don't have to, but yes, it's definitely correct, because we always are trying to get a smaller risk. We can go to lower time frame when the higher time frames have nothing against us and only supporting us, right? On the 1 hour chart, we got the triple cycle up yesterday, and we say that we have, in that case, three options. Option number one, double cycle correction. Option number two, range. Option number three, bullish hidden divergence. That's the options we have. In that case, we got both range false break. No, actually, this is not a false break. That's pretty much the same zone. Ranging pattern, and we also got 1, 2. This was triggered right here. What do we have in that place? A bullish divergence on a double bottom. Is that a correct trade? Yes or no? Of course, it's a perfect trade. Not a correct, it's a perfect trade. Why the two candles? Of course they are correct. Why it's not correct? Two candles rule in play. The correction itself reached the Fibonacci retracement of the rally cycle. Of course it's good. Why not? It's perfect. It's not good, it's perfect. So that's all. The Aussie Kiwi is running to the upside, now developing the divergence against. Now it would be good time to move break even and not losing any of the profits. That's exactly the cases where all the time frames are lined up. That's exactly the cases where we can allow ourselves even to take more aggressive setups. When you have the time frames lined up, each time frame giving you the signs that you want to see, and you do not have signs against you, you are free to go. And that's exactly what we've been waiting for a while now for the Aussie Kiwi, and finally it got paid. Again, expectations here are according to the daily cycles, of course. We can start first of all from the last leg. This is a 4-hour chart triple cycle. So 50% of it could be the first destination. The bigger one could be then the daily double cycle zone that's here. And of course, the possibility for the big triple even up to here. So that's for the short and mid term, because for the long term, if this is a really weekly and monthly cycle, we are for the 113. That's for a very, very long term. Or maybe even higher. Okay, so that's all. That's for the Aussie Kiwi. A quick update about the development that we got. Next one on the list that we are following, dollar yen. So dollar yen, we got ourselves this zone that we're accepting the buy is up to, right? This is our area. So let's mark it here. That's our possible target. Now on the dollar yen, we got triple cycle, which means we can get the corrections down to here. Right? We have to remember that if we would like to deal with the longs here. Now, the last divergence that has on the dollar, versus the yen, was this, right, on that place. From that moment, we are looking for two waves retrace, right, or a range, or a bullish hidden divergence, ideally from the zone we would like to see. Now, the pair does develop here this bullish hidden divergence. See, on the inner legs. Can we go, and I want to remind and specifically show you here this situation. Can we go and start looking for the buys here, which means on the 1 hour chart, yes or no? I have two no's. Who else wants to try? Three no's. Oh, actually, I was expecting yeses. I was expecting some yeses, not no's. But you are very right, guys. Is that worth it to try the buys here? I think, personally, no. For the same reason I just showed. This is a triple cycle on the 4 hour chart. The correction has to be pretty much related to this cycle. So by ideal to here. That could be also a range to that point. That could be also two waves to that point, right? But that would be our best place. Now, more than that, if we have to refer only to the bullish hidden divergence, which we showed here between these spots, look where the divergence goes through. It's straight move down, one move, not two, one move through all the Fibonacci retraces. So it's again a very possible trap from the market, right? Because yes, it is bullish hidden. Yes, it is bullish hidden. Yes, it has the confirmations for that on the day, on the 1 hour. Yes, it has a room for that on the daily. But is that a good one to rely on? This is one straight move. 1, 2, straight move. Straight, right? So why would we take ourselves and risk it even before we, let's zoom out a bit, even before we have reached the correction zone from this triple cycle? Do you see how timing is important, guys? Do you see the importance of timing? So divergence is the first thing we see, right? And it's too easy to say, oh, so this has to be a buy. But stop for a second and ask yourself, is that a really good place for the buys? It's one small tiny correction versus the triple cycle. Is that enough for us, yes or no? So the answer for that would be no. And on the short view, the 1 hour chart suggests kind of a triple cycle here, which means it can definitely do this scenario for us, right? Agree? Where from, yes, we might go and start looking for the buys that are on, but that's the fact. That's the bottom line. In very simple words, we have no good conditions for the buys yet. And if you insist to take such buy setups only relying on the bullish hidden divergence, only relying on the bullish hidden divergence, no problem. Then at least use small risk. At least use small risk. That's the most important thing here. The conditions are not the best. Therefore, at least protect yourself in terms of the risk. Okay, so that's for the dollar yen. Next yen pairs, euro yen. Euro yen is trying to complete the breakout of the trend line, which of course we can mark also from the last low here. And the big one though, the big one though still not broken. For the weekly cycle, the big one of course has to be broken, the main one that is building up also on a daily, but we can start looking for the sells with the one we have. I have it from here because this is where we get the last lows and the last trend line. So it's trying to break down. Now, break below this low would give the okay to start looking for the short-term sells. And again, for the long term, because we want to join a weekly cycle, we would want to go with the big view for conservative confirmation, right? We're pretty far from there yet. So for the short term, we can definitely start with this. So Euro Yen, from my point of view, is back to bearish, and I would be looking for sells with this level as invalidation. Okay, that's for this pair. Which, by the way, brings me back to the euro dollar. And as we said, as long as we are inside the range, we would preferably look for two waves up and sells. This is exactly what we get on the 4-hour chart. And the euro dollar is breaking down. Basically, we got some negative momentum with the German data came up very bearish there this morning on the financial conditions there. That's what puts the pressure. So for the euro dollar, we can definitely start looking for the sells. Short-term invalidation is here. Okay, so euro becomes bearish as well. Euro Aussie, now this one is the one we've been talking about yesterday, that according to the way it has right now, we can get two waves, we can get into range, we can get it bigger. Now I want to quickly go over this situation, because yesterday we already got bearish hidden divergence. It was, sorry, from here, bearish hidden divergence. And on the 1-hour chart, we got these two waves and a breakout. Well, there was a discussion yesterday about that in the group, in the Telegram. Is that correct or no? So my answer is always in such situations is no. Not because the weekly and the daily are wrong. They of course are supportive. Mainly it's because too early. What are these little facts that we can pay attention to in order to stay safer? So first of all, the correction of the triple cycle down, right? If that was a triple cycle down, that's the first one. Since we already crossed the 38.2, this doesn't really give us any suspicious sign. Second thing is the angle. That's a pretty straight move with a very sharp angle. Normally, that's tricky conditions. And the third one, and the most important one, is how related the correction is to the entire move. If this is a triple cycle, 1, 2, 3, then with very big probability, the correction would have angle related to that. So that could be a possible scenario. In order not to fall in that traps, we always would want to get double confirmations on the low time frame if we trade them. So on the 1-hour chart, if this is the break of the trend line, no problem, wait for the double confirmation. Double confirmation has to be bearish hidden divergence or two waves and breakout. Never happened, and another spike was created. Now look what is building up. 1, 2, 3. What are our possibilities from here? 1, 2, and the possible higher move. So once again, the importance of waiting for a clear setup on the right time. Not that the idea here is wrong, because we do have a bearish hidden divergence on the 4-hour chart, and we do have two waves with the breakout on the Euro Aussie. But this tiny correction is one straight move. It is one straight move on the 4-hour chart, while the move down was in 3 moves. So can that be any way related? No. And that's where most likely traps start to happen. That's exactly the conditions. That's the best conditions for traps. That's what the market is waiting for. Okay, that's all. That's basically all. Always remember, what is your cycle and what are your current conditions. And the best answer for that would be very simple. If you are looking to join the weekly cycle, you want to trade corrections on daily or the 4-hour chart. Do you have corrections on a daily? Do you have corrections on the 4-hour? The answer for both is no. And this is the best explanation for wait for clearer setup. Do you see that, guys? Do you understand what I'm saying here? You're looking to join the weekly cycle, because if you would be looking to join the daily cycle, which was this double, then the 38.2 here was taken. Now we have nothing to do here on the short view, right? If you're looking to join the weekly cycle, get yourself your confirmation on a daily or the 4-hour chart, the correction, sorry, and not the 1-hour chart. That's all. All right? Any questions about that? And by the way, just one little thing here, because I've been talking about this pair a lot yesterday. If you really pay attention to the idea of the hidden divergence, you would figure out that there is no hidden divergence here that you can rely on. It's also kind of a trap, because it never got to candles. So this looks good, but when you dig deeper, you find a lot of reasons why it's not. And that's all. Okay, too many warning signs. And this is why, from my point of view, Euro Aussie can still work out into something like that. And with a very big chance, it will. There is no guarantee for that, of course, but that's the way it seems building up. And if we get this triple double, that might be the best confirmation for that. Is that okay, guys? No, Kostas, we don't need to use the mirror principle or anything like that. You just need to always remember that you are trading, you are looking for retraces. Retraces have to be, well, I would say reasonable compared to the move. If your trade is like this and your correction is like this, that might be not enough. That's where the traps happen. It has nothing to do with mirrors in that idea. Okay, so just need the correction should be reasonable, but always ask yourself, first of all, what is the cycle you are looking to trade? Is it the weekly? Is it the daily? If it's your weekly, then the corrections have to be on the daily or the 4-hour chart. Only after you get there you can trade the 1-hour chart. Only after you get there. Okay, that's basically all. So that's for the Euro Aussie. Pound Aussie, still unchanged, basically, still bullish. I would keep an eye on that to see how it develops. If the MACD ticks down here, that could be a hint that the pound Aussie is finalizing its rally. It's not there yet. I suspect we are going to see some pullback here and continuation. That's why first of all, let's follow up and see how this situation develops. Next one, pound dollar. I've been asked this morning, what do I think about the pound dollar? Well, my view did not change since yesterday. It's still bullish. We have no false breaks on the 4-hour chart, no false breaks and convergence, correct one, on the 1-hour chart. So why would we do anything else here? There is currently nothing on the pound dollar, right? That's not an official high. We don't have any convergence here, nothing. So from my point of view, it was and still remains bullish, and the trend for this one still offers 145, 146. Yes, on the short term, we might go and get some kind of corrections according to this mini cycle, right? But I don't see them changing the bigger view. So my view remains bullish, which ideally, of course, means buy retraces. But the bottom line, the view is still bullish. Okay. Kiwi yen. Well, Kiwi yen, as I said yesterday, for me it's more bearish now. We are inside a channel. Top of the channel, daily bearish hidden divergence, and 4-hour chart is a cycle, which again, for me, it makes much more logics to sell. I think I explained it yesterday, no? Didn't I? So this is an invalidation area for sells. Top of the daily channel, bearish hidden divergence and a triple cycle on the 4-hour chart. That's why, from my point of view, we are bearish. And of course, it all starts from the weekly, which also is bearish according to that. So I would expect continuation. Okay. Well, what will happen after a drop, we never know. But at this time being, the reasons for the sells, from my point of view, and again, I might be wrong, of course, but the way I see that, it's much more bearish than bullish. And for all those who were talking about a bullish hidden divergence, 100% correct. But hidden divergence must be only, well, will be only good if higher time frame does not have divergence against you. And higher time frame does have divergence against you. And that's where the trap comes on. Is this not a convergence? I assume you're referring to this one? Right. Convergence could be at the end of a trend. Since we are still sitting inside a range, I don't think it is. Once again, I might be of course wrong, but the way I see that, all the things together, weekly is still bearish. Therefore, better to look for sells. That again, just my point of view, okay? It doesn't mean I'm correct, doesn't mean I'm wrong or anything like that. That's just my point of view. And the way I treat that is bearish, as long as we are below this invalidation area. Keep in mind, we have news, CPI in New Zealand this week. That might change everything, of course, or support. So as for now, that's the view, and for me it's bearish, exactly as explained yesterday. Okay, good. Now let me just for a second go over my list and see where Aussie Kiwi discussed, right? Yes. Okay, Aussie franc. Now I want again to talk about this pair because it keeps proving the importance of patience. In order to be selling, what do we need to get? Last trend line breakout, right? Because weekly is bullish, daily is bullish. That's what we get. Now the daily, yes, it has a good zone here for possible sells, definitely. But in order to be able to go against higher time frames, we need two fallbacks and convergence. Do we have it here? No. Do we have it here? No. Do we have triple cycle down, double cycle up? Again, the answer is no. So in order to become bearish, we must at least break the trend line. The last trend line currently is this. Okay, and that's why make go and sell this pair does not make any sense. Okay, go and sell this pair does not make any sense. As simple as that. Yet. Okay, now comes the question. Is that smart to go and buy here against the daily divergence? What would be the answer? No, it's not. And the reason for the reason is that in that places exactly many times what the market is doing is 1 2 rally 1 2 rally 1 2 rally 1 2, and then we found ourselves in these situations wondering, but this is a trend line, but this is a rally, but too many buts, right? When you have signs against, you better avoid. One time it can be a miss. 3 times it would save a loss. So on what part is best to be? On that part it will save for you a loss. It's better to miss a move than to regret on a few others would take. Remember that. So looking back, it's easy to say here. So that was a double trend line, breakout, and a fly. We can make money. Well, theoretically, based on looking on the past, yes, we could, and that would pay. And the test of the reality, as I said, one time you will miss, like in that case. 3 other times or more, it will save, like in the Euro Aussie, for example, or many other cases. It's very, very important to remember these little things. As I always say and remind, the idea to improve the performance is not to make more profit, is first of all to make less losses. Because when you control the losses, the performance has nothing else to do but rise accordingly and get improved accordingly. And when you control the losses, the profits will follow because you do much less mistakes. That's all. So that's all the Aussie front. Note, it could easily turn to be a false breakout here with this divergence. Then this become the trend line. And from this area, if we get a breakout, we can start looking for double confirmations and short-term sells. Okay, that's all. And yes, if you would like to join the weekly cycle, you would want to see 2 waves retrace to the downside and the buys, or bullish divergence, right? That's the idea. Very simple. And once again, the divergence was on daily, the divergence is also on the 4-hour chart. So you would at least want to see a bullish hidden divergence on this time frame, right? At least. Did we have one? No, we didn't. That's what makes it very, very risky. and on such places we don't want to trade risky. Pound franc still bullish, nothing changed, still holding the rally, no false breaks, no lower lows, no trendline breakouts. The next possible target for the pound franc is the zone of 141, which fits in here. Okay, this is the next area where it seems it's going. No divergence completed on the weekly cycle, very important to mention. So the pair is most likely going towards this area. So on the short term, it remains bullish. Euro franc, start to pay attention. Said it yesterday. We are getting closer to 120. It's building up. We have nothing yet there for the sells. It's coming. It's warming up. And dollar franc, accordingly, still acceptable for both directions, of course. Only on the short term, because the daily is still building, completing, developing its divergence. The trend line on a daily cycle is a very reasonable zone, together with the 097 area. Very likely we are to there as a short-term rallies. Euro pound, also we keep an eye here. We are on the 61 zone and on the duplication area for this cycle. Right, this is a classical zone for us. We would want to start to see false breaks and higher highs, as explained, right? False breaks, and higher highs before we will accept short-term corrections. So keep an eye here on the euro pound. The levels are good. The divergence is developing good on the daily time frame. So there is no yet reason for buys, but it's, as you can see, it's warming up. It's happening. Okay, let me just go over the list you already discussed. Gold and silver unchanged. No, the rest. Oh, indices. Sorry. Indices. DAX invalidated the short-term high. This one. So this breakout failed on that place. So the next level to watch out for the DAX is the first one. Well, first of all, it's still here, right? It can still get the turnaround. Then the last trend line for us would be, of course, this. But the next level, if we continue the evaluation, it's going to be slightly higher, around the 13,000. Okay. It doesn't change nothing on a daily and the weekly because the idea is still the same, and the daily is developing its bearish hit, and so only question where it's going to hit from. We are waiting for the new signs. New signs means new trendline breakouts to get the momentum. Meanwhile, we have simply nothing. Same with the UK, which is offering us the 161 slightly higher. That would be pretty classical zone to get it from. We have the big trend line to follow from that for the breakout. Same with all of them. Nasdaq and Dow, they are so far following the trend lines. No breakouts happen, so no entries happen. Meanwhile, it's all in the corrective cycle. No changes also on the stocks and on the cryptos. We are still in same setups, same ideas, same zones for all of them because they didn't move much, to be honest, from them. So the bullish scenario for everywhere remains on. Any questions or anything on your list, guys? Anything I did not cover, or anything you have on your list that you would like to go over? By the way, that was a question about the New Zealandian dollar. Now, New Zealandian dollar, as you remember, we have the range of the weekly, which means we are after sales. We have the range on the daily, which means we are for sales, and on the same time we have a cycle on a daily which offers 61.8, still slightly higher. This is the bearish hidden divergence if this is for trend continuation, and the problem with that was that it went through all the Fibonacci's, which doesn't look good. And at this stage we are still stuck inside the last two candles on a daily time frame, which is again very tricky and suspicious. Now it is trying to break through the 4-hour chart trend line, and in that case, when both scenarios become tradable and possible, the best thing to do is double confirmation, right? Especially when the CPI news about to be published this week, right? So double confirmation in that condition is the best. We got a breakout. If we get the setup, that two waves retrace or bearish hidden divergence, we can then start looking for an official sell. Okay, on that situation, with a possible bullish divergence to be developed right with the breakout, that could easily turn to be a trap by itself. Any questions on your list, guys? If yes, please cover it right now. If you have any interesting pair that you would like to go over. So what do we have new for today? Euro dollar, euro yen, the main ones. Dollar yen we're waiting for. Dollar CAD getting closer to our levels. New Zealandian CAD waiting for our continuing our sales there. That's the main ones we have going and developing. Euro pound also around very interesting level. We have the Aussie Kiwi running. That's our main list. Aussie dollar unchanged. I don't see nothing here. Aussie dollar I would like to see, because of the setup, two waves and possible buys. We currently don't have it. I wouldn't trade it, to be honest. Or you refer to the 1-hour chart? What was the idea? If it's 1-hour chart, then it's simply early. Well, generally still for both. I still prefer to get the two waves here for long, but it's only for short term. Nothing clear with this pair from my point of view. Nothing clear. Euro Kiwi here. The Euro Kiwi ideally is still for sells, right? We go to the 4-hour chart. We are looking for two waves up. Do we have any? No, we don't. So the idea is exactly like it was yesterday. We can get the kind of correction like this on two waves or a range before the sell continues. So the thing now with the Euro Aussie is, with the Euro Kiwi, is exactly like Euro Aussie, triple, right? So we might face here a double correction or a range before another push to the upside. It's pretty much 1-to-1 like the Euro Aussie. So short-term buy retraces can still be the case. And for longer term, we want to go and sell a good retest in the 4-hour chart. You can see it's one leg, no two candles, nowhere. One straight move. And that's where the suspicious comes from, right? This was a triple. This is only one. That's where the suspicious come from. That's normally where traps happen. Normally, right? Normally, exactly the places where the traps happen, like we saw with the Euro Aussie and few of the others. All right, so that's what we have for now for Mr. Market, guys. So I think it's more than enough. Aussie, Kiwi, Euro dollar, Euro yen, and New Zealand and CAD going, and we have several more on the development list which we should keep an eye on. That's all for now. I'll see you tomorrow, and don't forget, guys, you have a session today, well, tonight, or on your early morning tomorrow with Jordan. He is back. Because of traveling, he cannot do the whole week, so he will do one today, one Friday. Okay, so take care, and I'll see you in the Telegram groups. Have a wonderful day. Thank you for being here. Bye for now.